What has been keeping you up at night after these conversations? And I think what has kept me up at night, but in a good way, in an inspired way, is that how much I don't know. And I mentioned at the beginning that I want to be a student and remain a student. And it links back to Augusto's point that I want to continue to evolve as an investor. But after every conversation, I realize that there's so much more and so many better questions to ask. So on one hand, I'm very inspired. There's so much more to discover. On the other hand, it's very humbling that there's so much more that I'd love to know. Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question, what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses, while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on the show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. I welcome you to the 100th special episode of Talking Billions. Each episode is different, but this one is especially different because for the first time ever, I'm answering your questions. In the spirit of Charlie Munger, every day I try to be useful and I add more value to everyone around me, family, friends, clients, my audience. I always wonder, what can I do for you? When I was thinking about this milestone episode, I had many ideas. But then a recent conversation with an upcoming guest, you will realize later who, made me think that I should turn the tables again and have you ask questions. What's on your mind? So here we are. And you have asked some excellent questions that I'm eager to answer. Before we get there, let me share probably the biggest lesson of this 2-year, 100-episode experiment. And the lesson is, the more I act like a student, the more I will learn. The more teachers will find their way to me. And that's how the experience has felt to me. It's been an incredible opportunity to learn, grow, question, but also understand better and deeper the many topics I'm passionate about. And all of it has been happening with a beautiful company of some excellent guests and, of course, you, my wonderful audience. I'd like to think that all my guests would have showed up to talk to me just for me, as many have in the past with no microphone in the room. But having all of you by my side has probably been a great sweetener and extra motivation. So thank you. The episodes themselves, that hour or the hour and a half, is the peak of the iceberg, which includes countless calls, conversations, books, reading material, and ideas sent to me. I remind myself often that it's hundreds, if not thousands of hours that go into distilling what you hear each week. My guests bring a lifetime of expertise, study, research, thought, experience. I'm holding a magnifying glass to distill it further. You might not know, but there's a loyal growing group of Talking Billions curators who keep sending me books, content, making introductions, and more. You know who you are, and I know that many of you value highly your privacy, but your help blessings and support have been very much noticed and appreciated. So thank you. After the first few episodes, I was barely checking how many people are listening, just as you wouldn't check the price of a stock the day after you bought it. It's just too soon. But as time passed, I noticed your numbers are growing. And I also started receiving emails, and I realized that there's a big and expanding audience for the topics that get me out of bed in the morning and keep me up at night. I see you as fellow travelers on a shared journey, and I feel like I have this experience, one-on-one experience with each and every one of you. So thank you for that. I continue to encourage you to write to me. I read all my emails, and you know that. Someone told me that I'm like a professor who brings a guest speaker to his lecture, only that the audience exceeds anything I could fit in most university lecture rooms. I'm reading that most lecture halls range between 300 and 500 people. Well, there's more of you listening or watching each week than a multiple of the upper end of the range. Apparently, Harvard Sanders Theater can seat 1,000 people. Well, I have to tell you that you wouldn't fit there either. I'll share with you another fun fact. More listeners tune in to Talking Billions than there were attendees at the Berkshire meetings in the 1990s. So thank you. You've been tuning in from 147 countries, and you're listeners of all ages. The speakers have been also of a wide age range from both Americas, Europe, Asia, Africa, Australia. So all 6 continents are represented, and across time zones, which has made scheduling and recording a fun challenge sometimes. My guests on purpose range from those who absolutely have no prior podcast or interview experience, and those with hundreds of interviews behind them. I think one guest did almost 1,000 interviews before we spoke. This podcast has become a unique space that I find is almost impossible to replicate elsewhere. And the secret has been the presence and the attention of all parties involved, the host, the guest, and the audience. I collected all your questions and organized them, but I have not prepared the answers. I will read them with you today and answer as if you and I just got comfortable with a cup of some warm beverage by a fireplace in some cozy cabin deep in the woods with mountains around us. Before we get started, let me say that at the end of the episode, I will share with you 2 things. One is a new project that I'm excited about, that I'm working on. And the second one is, until today, a top secret search that one of my passionate listeners is on because of something he heard on the show. So don't miss the end of the episode. Let's get started. First question from Deepak from Mumbai, India. Deepak wants to know, how do I spend my day? What is my routine like? And what is the secret behind your multiple achievements of being an author, a speaker, a podcast host, advisor, who also reads and has so many hobbies, and who also knows how to fly a plane? How do you manage all? That's a question from Deepak. I talked about my daily routine with John Rotanti. If you can look up that episode, we talked about my daily routine. My secret is, I think there are two parts to it. One is that I'm very disciplined about how I spend my week, and I like to have big blocks that are available for anything that can come up, and then structured blocks as well. So that's my big secret, and I try to be very disciplined about it week in, week out. The other thing that I want to highlight is that when you look at anybody's work, you have to acknowledge that there are things that took years to produce. And I think we all overestimate how much we can do in a day, and we underestimate how much we can do in a year or 5 or 10. So a lot of the things that I managed to accomplish, as you put it, all the writing and podcasting and learning to fly a plane and running an investment firm, managing money for 20 years, all those things took time. So I would highly encourage you all to make a list of the things that you want to do and see which are the things that you can do by the end of the day. And there are probably fewer of those. And then think of the things you could do within 5 or 10 years. I think a lot more things become much more possible if you can give yourself time. This is just like investing when you think about it. If you expect the stock to impress you within a day, that's a very different ask than if you give that stock 5 years to make a real impression and make a real difference. I have a question from Matt Ziegler from Cultish Creative. Matt is a great friend, just a wonderful person, and he was on the show a couple of times. He was really the inspiration behind the fireside chats, where I turn the tables and I'll answer questions that my previous guests ask, and Matt was one of them. So Matt wants to know what I have learned about my audience as it's grown and taken new shapes over the 100 episodes that I didn't expect. Matt, I think I was really touched and impressed and flattered how loyal the audience has become. And there are many ways to look at it, but to me, the two big things are, one is I see how many people are listening until the end of the episode. And that makes me think that I'm doing something right in terms of how the questions are structured, how the conversation flows, and how people have a reason to listen to the end. And also the topics, the guests, and everything else that comes with it, that you want to stay until the end. So that's really precious to me. And the second thing is that's harder to quantify, but it's more qualitative in my mind, is the response that I get, the emails, the messages from people who write to me their life stories, and I really appreciate it. It's all very touching. I feel like money is such a personal, intimate topic, and I share my stories because I feel like that allows the audience, my clients, everybody, to get to know me a bit better. But it also invites you to share more about your journeys, and it's incredible when you dig a bit deeper and you think about family wealth and the stories that people have of the great-grandparents or the great-great-grandparents that were some of the wealthiest individuals out there, and they have all kinds of tales of what happened with those fortunes. So for me, it's a great opportunity to learn more about you, but also fill in the gaps in my understanding of family wealth and wealth growth and preservation over generations, what else I should know, and what other experiences that I haven't been exposed to I should know about. So I appreciate that. So in a nutshell, Matt, I feel like the audience has become a part of this journey, and I greatly appreciate it. Without you all, I don't think it would be possible to the extent it has been. So I want to say thank you. I have a question from Niraj. Hi, Niraj. I know Niraj. Niraj is a good friend, and we spoke on a couple of occasions. He tells me that he listened to all episodes. Yet again, that's a wonderful thing to know, not only the entire episodes, but also to all of them. I'm very flattered. I appreciate that. He wants to know, in what ways do I think hosting the podcast has changed me and my work? Niraj, podcasting has become an integral part of my work and my thinking and my knowledge acquisition and my day. It creates a beautiful flow. So I have those sprints, I call them sprints, when I record a couple of episodes that get scheduled ahead of time. And the people I talk to are, I would say busy or with schedules that have other demands. So we book it ahead of time. And all those conversations create this beautiful flow. My preparation, my reading, writing down the questions, thinking about the episode. Even today I was recording with someone. I'm really excited to share that episode. I'm not going to tell you who it is, but he's somebody really special. We had to push the call by one day for various reasons. And I came up with a handful of questions because I had the extra day. So this magic happens how my mind has a minute to think more about the questions. And we had a fascinating, beautifully flowing conversation. Looking forward to sharing. But I see this as a flow between my podcasting, my writing, and my actual investments, managing money for families. That's what I do. That's my main role. But I think they all benefit from each other. A client asks me a question and I ponder about the answer. The better the question, the more I have to ponder. And then that idea, that topic is on my mind. So I hop on the podcast, I talk to somebody, or I talk to a previous guest or somebody I met because of the podcast, and we have a conversation about something related. And I see the same issue from a different point of view. And I can bring back that kind of value back to my client. And it's the same with writing. Somebody asks me a question, it becomes an article that I bring up in the episode, and then it circles back to a conversation or something that has to be solved for a client. And I can do it better because of this flywheel, in a way, of ideas and concepts and topics. And it allows my brain to stay active in so many different ways because of the conversations that I can have, because of the guests I get to talk to. So somebody asked me if I had to choose, podcasting, investing, or writing articles. Obviously I can't imagine my life without investing. But nowadays, I'm having a hard time imagining my life without writing and podcasting. So in short answer would be the podcasting became an integral part of my life, my work, my thinking. I have a question from John Rotanti. John Rotanti is a good friend. He's been on the show a couple of times. He also hosted a fireside chat, which I highly recommend. John has a very tricky question. John wants to know, how do I like my coffee? And I have to tell you that has changed. John loves coffee, so I'm guessing that's the reason behind the question. But back in the day, living in New York, cold winter day, I would grab a big coffee from Starbucks with some seasonal flavoring, salted caramel mocha, I remember. And it was a bit of a treat. I do remember a kind of a ritual that I had, to the point that the Starbucks app, knew that I'm in the area or it's my time to go get a coffee. I would go on Thursdays to my Toastmasters meetings, and we would practice public speaking. And after that, I would be tired in many different ways, still coming back to the office for a few hours, and I would grab coffee on the way back and bring it back to the office and put in a few more hours of work. So Starbucks knew what I'm about. These days, it's more of a espresso here and there after a meal, and the setting has changed. So, but if I'm somewhere up north in the US and it's winter time, I would be very tempted to have one of those seasonal flavors. So I hope that answers your question, John. I'd be curious to hear about your coffee habits. Matthew Stafford. Matthew Stafford is a good friend, a fellow Value Xer. We connected before we met in Switzerland, actually. And he was a guest on the show, and I highly recommend. He wrote a book, 9 Others, and talks about the idea of connecting with fellow founders out there in the world, just a kind soul. And Matt was also on the show hosting one of the fireside chats that I highly recommend. Matthew has a question. It's 10 years from now, and you're celebrating something big. What is it? Where are you? And how are you celebrating? That's a great question. I've been thinking a lot about milestones, and the 100th episode is kind of an excuse to, for example, host this episode and talk to you and answer your questions. So I see a kind of a playful way of looking at milestones as an excuse to both, regroup, rethink, and get a new source of excitement about what's next. But to me, the moment of celebration, it's more of a feeling. Am I on the right track? Am I doing what I want to do? I was talking to Justin Castelli, who will be soon a guest on the show. We recorded already, and about being an authentic self, what it means, and in many different ways that topic came up with other guests. What does it mean to live your authentic life? But if you have those moments where you realize that everything is lining up and it's exactly what you want to be doing at the time with the people, and so on, I think that's what I'd like to be celebrating, Matthew. And I hope I don't have to wait 10 years for it, and it will be happening more regularly as I go. But those moments are really precious. I have a question from Christina Espinal, who is also an upcoming guest. We recorded already and had a very moving, deep conversation about living your best life. She wants to know, which conversations have you enjoyed the most and why? And she adds, Christina, you add, not necessarily naming guests, but rather identifying the elements that made them great in your eyes. That's a beautiful question. After 100 episodes, I still have a very vivid memory of each and every conversation. And I have to say that it's the space, the opportunity, and the time to connect with people in a way that's very hard to replicate outside. But also the guests, there's a certain intensity about them in those moments. And when you invite them to speak about the things they're passionate about, you can get to know them in a way that's very unique and very special to me. So I had so many feelings where I thought I'm tapping to the source. I think that's the best way to describe it. And as I mentioned earlier, you think you have an hour with somebody, but you're really having 10,000 hours with them. All those hours that they spend thinking about something, and they tell you something in a 1-minute explanation, but you can tell that they put in the time to give you that 1-minute explanation, and it just makes you see things in a different way. So that's what I enjoyed the most, being able to create those moments. And they don't happen right away. And in some cases, they happen in the second half of the conversation, where we kind of did the circles around the topics and created this new vocabulary that the audience gets introduced to. And then we finally tap into something that's really, really, precious and important to my guests. And I'm very fond of those moments. I have a question from Raini. Raini is a good friend, and we spent quite a bit of time together over the last few years. And Raini has a difficult question, I think, and the one that will make me think quite a bit in a minute. But Raini, you're asking, what would you do if you started over with zero? Now, and it's a $0 sign, so it's zero money, financially speaking. Now, I would assume and I would hope that I could have the knowledge, understanding, and experience that I have today. But if you took that away, and I had to start from zero as a 20-year-old learning things, maybe the 20-year-old that discovered Peter Lynch and went up on Wall Street and got really fascinated with investing. But I think what I've learned is that there are no shortcuts, whether it's the acquisition of wisdom, knowledge, experience, or money. You have to start somewhere and add to it every day. Munger has this idea about the first $100,000, and he basically says, earn it and then save like crazy. Even if you have to walk everywhere and use coupons to buy everything, he jokingly said. But I think there's some truth to it, that the initial savings will come at a big price of, compromise and sacrifice. And I haven't found a shortcut. If anybody has one, I'd be curious to hear it. But the idea is that you have to start earning and then find a way to start saving as soon as possible. Not immediately probably to invest, but to have a buffer. And with that buffer, you have choices. And with those choices, you have a lot more freedom. And you can look at things differently because you have a couple of weeks, a couple of months, maybe a year or two of expenses saved. And then you can start thinking about investing and having money earn money for you. I recently wrote a post that I highly recommend. I called it The 3 Escape Velocities of Money. And I explain this kind of a journey of first spending less than you earn and saving, then realizing that your invested capital is earning more for you than your paycheck. I think it's a big revelation for people when they see that the money, the capital is working in the background. It's almost like having the second self. Like you're working and earning the 50,000, 100,000, or whatever it is. And then your capital is earning the same amount of money. I think it opens your eyes to something different when potentially in the future, and that's where we get to the third velocity, where the capital could be earning so much that work becomes optional. And you can start to explore the idea of true financial independence. But you got to start somewhere. I have a question from Derek. Derek is a good friend. We met in Omaha, and Derek has a tricky question. I see it already. You want to know, Derek, if I could buy and own 100% of any private business and hold it forever, which would it be and why? And you said the US. Somehow a business popped in my head that's not in the US. It's tricky, and I'll be a bit cryptic about it, and because I don't want to, recommend or endorse any particular business. But I'll go with the flow here, and I was thinking about a European business that's a global business. And recently I wrote an article how I'm looking for businesses that are ubiquitous, global, and profitable, or highly profitable. And there's a certain business that has all of those qualities and happens to be privately held. And it's as European as it is global, so I think it's fair to think of it. But if you ever had to buy furniture and you had to assemble it yourself, and probably pick it up yourself too, you'll know which company it is, and I'll let you explore more. But I have a lot of respect for that business. And when I think of that private and public distinction, in one way of looking at it, if a business has grown so big over a long period of time and it still remains private, it tells you a couple of things. One of them is that it was self-funded. It didn't need to go to the public market and sell shares or borrow money to grow. So it kind of gives you an idea that it has to be a special business that was able to fund its own growth and remain in the hands of the original owners. I think there's a deeper thought there and a cryptic answer, but I hope it helps, Derek. I have a question from Bridget. Bridget is a friend. We spent some time together in New York and in Omaha, and Bridget has a couple of questions. Bridget wants to know, what have you changed your mind about after having all these incredible conversations? Changed my mind about? The way I will look at it is, those conversations made me realize that my guests have a selected number of ideas, concepts. And they took those ideas very seriously. So I see it as great ideas taken very seriously. And these ideas are not necessarily a secret or something that you've never heard of. Like the idea of spending less than you earn, or investing your money in income-producing assets, and stocks being small pieces of businesses. All those are not really a secret that nobody has ever discovered before. I think the trick is to first embrace them. And I realize that it's hard to embrace them when they're just a one-line quote. You have to have a long experience with the idea. And I noticed that my guests have all chosen overlapping principles, in many ways overlapping ideas, but they took them so serious. So I think for me, the big lesson and revelation, and something that you could call it, change of mind here, but how much commitment they put behind those ideas. So I sharpened my views, and I realized how seriously people take those ideas. And I think of an investment portfolio. You could own the entire stock market, thousands of stocks. But if you start to choose and pick and put some more commitment behind fewer stocks, even if it's 30 of them, you have made a decision that there are so many that you will not participate in. And with ideas, it's the same. There are a lot of seemingly good ideas out there, but you have to choose. It's helpful to choose a handful of them and really stand behind them and take them seriously. I think that's the biggest revelation. I have a bonus question from Bridget. She wants to know, what would you want your life to look like if you only lived for a single day? Oh, Bridget. One day. Somehow I thought of the Groundhog Day with Bill Murray, who is stuck in Punxsutawney, Pennsylvania, and he relives one day, not his favorite day. He's a newscaster, and he's reporting about the first day of spring. And it's not a day he was looking forward to, but he makes the best out of this day and makes it better and better. When you asked that question, I was thinking of Luca Delana, who was on the show a couple of times, and he talks about playing the long game and avoiding game overs. But he also has this concept of optimizing your life if you were to live a day or 50 years. And I think it reframes a little bit what we're looking for in life, because there's some good ideas for a day and there's some good ideas for 50 years. But if you think about if this would be good for a day and it would be good for 50 years, maybe there's something there. But to exactly answer your question, if I could live for a single day, I have some pretty enjoyable days, most of my days. I get to read, I get to do the things that I enjoy. I spend time with my wife and a handful of friends. And I'm in the water, surfing, swimming, paddleboarding, most recently also wing foiling. So if I can collect a couple of those days here and there, that brings me a lot of joy. So it's the relationships, it's the people, it's being outside, it's being in the sun, and being surrounded by nature and good spirits. So that would be one single day, but that's what came to my mind as I was reading your question. Asel Altayeva is asking a question as well. She is the host of Femme Finance podcast, and I was a guest on her podcast, and I highly recommend it. And Asel has a couple of scholarships. She really accomplished a lot at her young age, and I would highly recommend everybody looking her up and her podcast and the kind of guests she invites and the conversations she has. So I appreciate her asking a question. I think she just started a new season of her podcast that I'm excited about too. And her question is, what's the plan for the next season? Well, it's a great question. I haven't officially broken up the show into seasons. That was the intention at the beginning. So we're getting to 100th episode, and technically it's still the first season because I have not taken a break. And I have to tell you that, speaking of plans, the more you do, the more things happen. I don't know how that works, probably physics. But I have about 30 episodes scheduled and upcoming ahead of the 100th that will be released this week. So I have a lot of incredible guests coming in the next few months. And my interesting challenge has been whether I keep the weekly releases or do I release 2 episodes per week. So the immediate plan is to speed up the releases so that my guests and the audience are not waiting for the episodes to come out. And we'll have 2 episodes per week for a while. So that's my immediate plan. Brendan Snow. Brendan and I connected, I think, about a year ago, and I was actually in Paris. I wrote a tweet that I'm listening to Guy Spears' interview. And Guy Spears is a good friend. I attended his Value X a couple of times. We met over the years, and he's been a guest on the podcast. I highly recommend his episode. We had a fascinating conversation about investing family money and other people's money. And I wrote that tweet that I'm listening to Guy Spears' episode, and Brendan responded, and we connected, and I realized that Brendan went to the same school, Sciences Po in Paris, at some point in his life. And we spoke a couple of times since, and we met in Omaha and spent even more time together. But Brendan connected me with a few guests on the show. Tom Morgan was one of them, so I'm very grateful. And Tom Morgan introduced me to so many people, including somebody I recorded with today, who will be a very special guest and episode in the coming weeks. So thank you both. Brendan, your question. I'd like to know how you think about portfolio construction and position sizing, and what causes you to buy, hold, and sell. I think it's a brilliant question about position sizing and the portfolio construction. I think that the big picture here is that we're thinking about stock picking as finding ideas that make sense on their own. They have attractive businesses, the price makes sense, you'd like to hold them for a while. That's the idea in a nutshell. But then they have to fit into a portfolio. And the portfolio has its limits. You know, you have $1 million, you have $10 million, you have 100,000, 10,000, whatever it is, but there's a limit. So you have to choose and pick what you're going to put in the portfolio. That's one thing. And the second thing, how big of a position are you going to take? And there are many ways to go about it. I know managers who have less than 10 positions, very large positions, and I know managers that have over 100. I found my sweet spot over the years between 30 and 50 for client portfolios. And usually I start with a 1% position and I build it from there. I often say how I want to be the least wrong. And one of the ways to go about it is to buy some and then have more space to buy more and more. Many of the stocks that I buy, they're good quality businesses, good managements, good prospects, but they're down cheap out of favor. And in many cases, and I'm about to write an article about it, how they are what I would call dead money for a while. I don't need an immediate catalyst. I can wait. But it also allows me to build up the position. And in some cases, I feel like the market has already processed all the bad news or seemingly bad news, short-term lift concerns. But then the price gets better and better, so it gives me a chance to buy. So that's how I buy. I call myself, Brendan, a value buyer and a growth holder, as you might know. So I do like to get a bargain when I buy, but I do realize that the real value creation, money-making opportunity is in the holding. So anybody can buy a stock, very few people can hold it. Selling is probably the hardest for somebody who wants to be a business owner. And valuation, as in the stock becoming expensive, is not a reason enough for me to sell. There has to be a shift, a change in the investment case. It's different than it was when I bought it. And I have reasons to trim the position. The other reason would be I need to make room for a new idea. But I'm very comfortable holding ideas over a long period of time and letting them run. And in my mind, and I mentioned it with a couple of guests, including John Rotanti, how I don't have price targets when I buy because it limits your imagination what the stock can do. And if you reach the price target, you're very tempted to sell it because you feel like you're right. You thought it's a $50 stock, you want to sell it. But it could be a $100 stock, a $200 stock. I'm thinking of Chris Mayer and his book about 100 beggars. These stocks took time to go up 100 times. You have to have a framework to allow them to stay in the portfolio. Brendan asks me here, do you diversify by currency or geography? How do you think about this? So I focus on the US public market, and it's the largest in the world. It's big, it's diversified. You have so many incredible businesses, and it's a place where businesses want to get listed, even if they were originally founded somewhere else. So I see this as an ongoing, never-ending, great pool to fish for ideas. And it will continue to grow and expand. That's how it's set up. That's what it looks like to me. Some businesses will go away, some of them will appear. Now, a big theme in terms of the currency and the geography is that a lot of the businesses these days that get listed, they're already so large that they have business in 100, 150 countries. So they are diversified in many different ways. And I say that a sweetener is, for me, when a business has better margins overseas than in the US. So not only I get all those currencies, but dollar is really the dominant in many cases, even if you do business overseas. But also so many markets and so many growing populations with growing appetite for things. So it's pretty remarkable. But a big picture idea to me is that 50 years ago, maybe 70 years ago, you would have national winners or regional winners. You would have a retail chain that dominates the Northeast and different parts of the country, for example. And then Peter Lynch picked up on something that I found fascinating, is that if a concept works in the Northeast, it probably works in California. Why wouldn't we roll it out in all the states? And US brands have this immediate perception and premium overseas. Either it's Hollywood, I don't know what it is. I would imagine it's the media, that people do want to have US brands. So when they show up overseas, they have such a huge head start. If you pick up a lesser known brand, for example, from Poland, where I grew up, people don't know it. So people might have some nostalgia towards it, shopping at a store in Brooklyn, but that's how far they can get. It's very hard to replicate the brand equity that a brand has, whether it's Poland or France or wherever it is, and make it global. There are some companies that have succeeded, but it seems to be a lot easier for US companies. So it's gotten easier to diversify that way. But I do pay attention, and I'd love to have companies that have something that can be sold globally and to a larger audience. I have a question from Augusto. Augusto is a listener, reader, and a big fan. So I appreciate your questions, Augusto, and I'm looking forward to actually connecting with you not long from now. Augusto wants to know, how have you evolved as an investor over time? What are the types of companies, sectors, situations you would consider in the past that you wouldn't nowadays? Do you believe that in order to succeed for your clients in the future, you will have to constantly evolve over time? So the short answer is yes and yes. So I do think that successful investors, part of the experience is continuous learning. And the podcast has been a wonderful way for me to stay on top of things that are appearing, new trends, new conversations, new ways of looking at things. I've been hearing about value investing 3.0 recently. I find it fascinating how the ideas that Ben Graham introduced us to, and Buffett and Munger, spread around, and they continue to change and evolve. And even when you look at Buffett, the kind of companies he owned as a youngster and the companies he owns now are different. And it's the nature of it. When you think about a family fortune, to me, it's this idea that this wealth has a chance to grow and perpetuate because it will be deployed in different businesses as we go. There's a fascinating moment, and I recently had a conversation with a CEO of a family office, and it will be one of the episodes you'll see in the near future, about that moment when a family sells the original business and then they choose to invest in a portfolio of businesses. I write about it in Money, Life, Family, one of my books. And they have this moment of accelerated wealth creation in one business usually, and then realizing that they have to hold a portfolio of businesses. But it's a huge leap in flexibility and freedom, because you get to reallocate the capital into many more businesses as you go, and you don't have to be committed to the same businesses forever. And the world will continue to change, consumers will continue to evolve, and you will have new businesses you want to be invested in. For me specifically, what I have learned in the first half or the first 1/3 of my career, I made a list of companies that caused trouble. And not just for me, but I was looking at other people and collecting businesses that got people in real trouble, investments. And I was looking for a permanent loss of capital. Situations where people lost, more than 50%, 70, 80, 90% of the capital, even if the company survived in some shape or form. It was hugely destructive. And I realized that you could narrow it down to a couple of situations. And the number one problem was too much leverage. The company borrowed too much money that brought it to the brink of bankruptcy. Then the second one was questionable management. And here, it doesn't have to be criminals running the business, but they are constantly over-promising and under-delivering to a larger and growing extent. And at some point, it can dance with a fraudulent experience too. So that's something that I want to be very cautious about. And the last thing, which I think is this invisible trap for a lot of investors, and I call it the secular decline. And it's a situation where the business stopped growing, but people think this is just a temporary issue. But actually the industry, the consumer, something has shifted so much that this business will get smaller and smaller and smaller. And I think that the trouble or the catch is that this process used to take decades before. 40 years ago. But today, I think it's a much more accelerated change. I'm thinking of BlackBerry, how quickly it went from the market darling to a massive loss of wealth. Kodak before and other companies. And it's something that's worth paying attention to. I'll only mention one more thing. I remember my early conversation with my early partners at the firm where I worked, and I focused on, I had a lot of questions, as you can imagine, and the questions that I had were around the loss. What you could have done to have avoided the losses? Where can I get in trouble? And I was intuitively inverting the way Munger talks about it, and I was looking for a list of situations that can get me in trouble. And Enron just went bust at the time, which was a fraud. So I thought that if I can remove from my universe the businesses that can get me in trouble, the good ones will take care of the upside. And I still believe that that's the case. But Augusta, I'll add one more thing. My focus has been on businesses with better margins, better metrics. But also I see that the future is probably more asset light, more dispersed, more distributed. And any company that can embrace those trends, I think can succeed. Asset heavy, old economy businesses, I think will have a harder time passing on pricing, keeping their margins, expanding, growing, attracting talent. So that's something I keep in mind. I'm thinking, where would I like to be in a more dynamic way in terms of value creation over the next few decades? And I wrote a piece about 20 stocks for 20 years. What kind of stocks deserve to be held for 20 years? I highly recommend it. And you can reach out and we can talk more about it. Fraser Rice, who is a good friend, who was a guest on the podcast, he's a family wealth expert and he wrote a wonderful book, and you should look him up and see everything that he does. He has a 2-part question. What has been keeping you up at night after these conversations? And I think what has kept me up at night, but in a good way, in an inspired way, is that how much I don't know. And I mentioned at the beginning that I want to be a student and remain a student. And it links back to Augusta's point that I want to continue to evolve as an investor. But after every conversation, I realize that there's so much more and so many better questions to ask. So on one hand, I'm very inspired. There's so much more to discover. On the other hand, it's very humbling that there's so much more that I'd love to know. You have a second question, which is, which conversation fundamentally changed your thinking on a topic? One conversation really stood out to me, and it was a conversation with Chris Mayer. Chris Mayer is a good friend, and he wrote the book 100 Beggars, but he also wrote a book, and a reward-winning book about general semantics. And it's a school of thought inspired by Alfred Korzybski. In a way, it's a philosophy. It's a way of interpretation in my mind of the world around us. And what I walked away with from that conversation is that the world is much more nuanced than we think. And I'll mention one thing, and I'll highly recommend Chris's book. And I highly recommend going back to Chris's episode on Talking Billions about general semantics. How do you know? And we talked about English as the language without absolutes. And it's such a powerful idea, one of many that we brought up. When we have a conversation, even an innocent one, we say nobody goes there anymore, or everybody wants to own a house in the neighborhood, or a value investor would never own that stock, and so on. And it's a very limiting way of looking at things, because we realize that, are you sure? And then you start to understand and try to redefine the different labels that we have in life. We say you're a value investor, you're a growth investor. And Buffett talks about it quite a bit, that you're just an investor. And Munger said all investing is value investing. At the end of the day, you want to get more than you paid. End of story. Whether you're buying tomatoes or a whole business, you want to get a better value. But that episode with Chris Mayer, with General Semantics, really opened my eyes to how I talk about my observations about the world, and introduced me to a much more nuanced way of looking at things. I highly recommend that episode. Pavel is a good friend. We met in Omaha. Pavel did a profile about me, the infinite conversation, that you can look up on my Substack, and I'll remember to include a link, and if I forget, remind me. Pavel wants to know, what's your vision of Berkshire? Beyond Warren Buffett, do you think that the culture will remain unchanged in the next 10 years? I want to say yes, and I believe that the effort that both Munger and Buffett put in creating this business, I actually asked Buffett and Munger a year ago at the annual meeting. I had the opportunity to stand in front of the microphone and ask a question about the 100-year vision for the company. And you can look it up online. I'll try to remember to include the link here. But the idea was that they built something to last. And when I think of family fortunes, it's something that's meant to last. And playing an infinite game here of getting it bigger, better, more beautiful over time. I think that's the idea. So I do think that the two of them made sure that the business is here to last, and there are a lot of very talented people behind Berkshire that will make it last. So I'm very hopeful, and I think it's a very unique company. And it's no investment endorsement here. I think you should do your own research and decide if it fits in your portfolio or not. But as a study, as a research, as a case study, it's a fascinating history. Adam Mead, who was on the show, wrote an incredible book about Berkshire that I highly recommend. And he really put in a lot of thought, and he's been on the show more than once. Another question from Pavel: what, in your opinion, is the biggest threat equity investors will face in the next 10 years? I think what will keep us on our toes is the accelerated change on one hand, and the disorienting times on the other hand. The accelerated change, I think we are witnessing a moment where the innovation is so fast, but it also spreads so quickly. If a business concept works in the US, it probably works around the globe. And it kind of becomes a standard, even a verb. So that's something that we have to pay attention, both in terms of trying to capture it as a business owner, but also as something that will disrupt some industries. And let's not forget, and it should be mentioned many times, that the top companies of today, when you look at top companies of the 1970s or 80s or 90s, you'd be surprised how many of them are no longer at the top. So to think that the battle has been won and there won't be any change at the top, and I don't mean just the top 5, but the top 50, I think there will be a lot of new businesses doing things better. And I'm looking forward to seeing them and seeing them getting listed so I can become an owner. And I say disorienting times, in so many ways, I think we're so much more connected in terms of media and news flow. I think we have to be more disciplined about filtering the noise out. And there are some big demographic changes that I'm paying attention to. And the global debt levels, the borrowing, the easy money policies. I think there will be a lot of things to keep an eye on and pay attention to. It's never been easy. I don't think it's easy now, but that's why anybody that says that investing is easy, I think has not paid attention. I think it's going to be fascinating and there will be many opportunities, but you got to pay attention. Pavel was asking me about gold, and I have a preference for owning businesses. So I would rather own businesses that have something to offer and I can buy them at attractive prices. I will share a little bit about gold, and I'm sure there are other people that have a lot more to say, that gold has been money as a store of value and way to exchange goods and services for a long period of time. That's why gold holds a certain special place in people's minds, and I think there's some validity to it. But at the end of the day, over a long period of time, if I had a choice, if I could hold, let's say, 30 quality businesses over 100 years and not touch them, just to make this a mental experiment, I would rather own the businesses than gold. Although I do think, and it's not a recommendation of any kind, I think you have to make your own decision or talk to your advisor. Gold could play a role in some way in some people's portfolio or asset allocation. So I'll end at that. Boris and I connected a couple of times, and we got to see each other in Omaha. Boris is from Nevada, and he wrote so many beautiful emails to me. So Boris, thank you so much. I really appreciate it. And you have a couple of questions. You want to know more about the idea of the infinite game of wealth creation. Was the idea of the infinite game of wealth creation and continuation a revelation for you? Or was it an idea that evolved in front of you? The idea of infinite games is beautifully presented in James Carson's book, Infinite Games and Finite Games. And in my mind, I always enjoyed playing the games, open-ended games. And when you ask the question, I do have to share that in 2014, when I was writing Outsmarting the Crowd, my first book, I came across James Carson's book, and I thought somebody gave me vocabulary for something that I intuitively knew. But it was such an empowering book. And I highly recommend Sean Delaney's interview with James Carson. And look it up, and I think it's a fascinating conversation. But what he shares is that there are two kinds of games, and you'll hear more about it in all the episodes, 100 episodes, but here I'll bring it back for those that are new to the topic. There are certain games in life that are finite. A game of chess, soccer, there are clear rules, there's an end, there's sometimes even time limit. There's a winner, there's a loser most of the time. But it's a game that you play to win. Now, infinite games, you play and you don't want them to end. Friendship is such a game. You can't really win friendship. Well, you could lose friendship. You don't want it. You want it to go on forever. You want to be able to play for as long as possible. And investing is such a game as well. If you're successful, if you're compounding capital over a long period of time, you don't want the game to end. And that's what really spoke to me reading James Carson's book. When I was a kid and we were playing board games, we actually or maybe it was me, I don't remember, we rewrote the rules so that we could play in perpetuity. And we were messing with the games to that point. So on some level, I already wanted to be able to play a game that never ends. And I remember playing computer games and getting those codes that would allow you to play forever without the end. So on some level, I wanted to be able to play a game that's worth playing forever. Learning is such a game, investing is such a game, but the more games like that you can have in your life, the better. I call them more pursuits than really a game. Boris, one more question from you. What past habits or behaviors did you have to unlearn to make the infinite game work for you? I must say that maybe I was blessed in some way that I never really had to unlearn. If anything, I had to appreciate that kind of dimension of certain games that are worth playing that might not have an end. And in an ideal situation, I'd like them not to have an end. So that's how I looked at it, that maybe I saw it as a new light on a familiar problem. When you look at investing, so many people talk about the winners, the losers, the best manager, the worst manager. And that's not the way to put it. You want to be able to play forever. The number one thing is not to have any game overs. I highly recommend Luca Delana's episode that Boris might know by heart. And one more from Boris. What is a common mistake players of the infinite game make? What pops in my head is that the err on the side of caution. And it's very tricky because you can only look at it kind of backwards, studying the past. But I think if you realize that you're playing a long-term game, you completely reframe your risks and rewards. And I don't really invite pointless risks, but I think you can reshape how you think about risks. And I don't mean volatility in stock prices. I mean the danger of a permanent loss of capital. But if you start to reframe it, and if you can take a long-term view, then a lot of opportunities appear. So on one hand, truly appreciating that you have time to wait. On the other hand, you have to redefine what caution means. I think that's the best way to put it. And just wait for the good things to happen. Compounding takes time. Luca Delana has this point that he makes that the brakes are put in the car to be able to go fast. So think about it for a second. Why do we have brakes in the car? He says to be able to go fast. If you have a long, long runway, you will go pretty fast. But it's good to have those brakes now and then as well on your journey. I have a question from Alex Vetterling. Alex Vetterling was a guest on the show early on with Andrew Stotts. And I think in that episode, I mentioned that one day I'd like to have 100 episodes. So here I am. Alex, thank you for your questions. And here are the questions. Alex wants to know, from the 100 episodes, what are your biggest learnings? I would repeat what I mentioned earlier, and I've been thinking a lot about it, that it's not that I discovered something that I never knew. Maybe some nuances and some stories really surprised me, like the one with Chris Mayer and General Semantics. But I realize how those principles and ideas that we all are familiar with, my guests have taken so seriously and devoted their life to pursuing them and making them a part of who they are, how they operate. So that's been really important. The other thing I would mention is relationships and time. You know, we talk about money and investing in the episodes, and I realized how the most important and priceless experiences in life are the relationships that we have. And even the recording I had the other day, we were talking about investing with somebody I really respect, and then at the end, we were talking the last 20 minutes about time, how he uses his time and how having this ability to use your time the way you like is important to him. So I would say that time and relationships are, of course, more important than money. Bottom line is to find a handful of big ideas, life-defining ideas, and take them very, very seriously. So that's how I would look at it. Alex, I mentioned that at the end, I'll share with you two secrets in a way. One is a story of Kevin. Kevin is behind the Atmos Invest Substack, and Kevin is a nuclear engineer. And Kevin listened to my episode with John Rotanti, a fireside chat, where I mentioned that I found 3 books in Brussels in that bookstore that I talked about so many times, and I gave a TEDx talk where I mentioned the bookstore too. So one book was One Up on Wall Street. Everybody listening knows by now. The second one was about the monetary policy, the Fed. It was about Alan Greenspan. And the third one was about a family that has had wealth over many generations. I want to say millennia. And in that book, which I didn't buy, I found this idea that you could have wealth over an infinite time horizon, almost perpetual wealth. And I don't remember a lot about that book. I do remember that I went back to that bookstore and the book was gone. And the bookstore didn't have many copies of individual books usually. So somebody bought it. I couldn't find it. It was the year 2001, 2002. And I have never been able to locate that book. So Kevin is on a mission to locate that book, and I wanted to share it with you. The bookstore was in Brussels. We already figured out that it was called Sterling. We also found out that it was closed a few years ago. And Kevin was able to contact the owners. We are still looking, and we haven't found the book, but if any of you can think of a book that would have been still available at the time, in 2001, 2002, in English, and tells the story of a family that has been wealthy for many generations. If you can think of that book, send me an email because I'm very curious after Kevin got me inspired to locate that book after so many years. And whether we find the book or not, the idea behind it is really one of the pillars of what I do. That's why it's such a precious thing. And I also want to say that if you find a book that you really like and you're in a bookstore, just buy it because you never know if you'll get to see it again. And these days, I think it's much easier to locate books. But in that moment, I missed the opportunity. And I wish I bought that book. So that's it. And then last but not least, I wanted to share with you that I will record as an audiobook my 5-year-old book, Money, Life, Family. The book came out just before COVID. It has some beautiful forewords, including one from Tony Deaton, who is a good friend who many of you might be familiar with, who gave a wonderful interview with Grant Williams a couple of years ago and explained his philosophy behind managing family wealth. And in that book, I share what I've learned managing family fortunes over the last 2 decades, but I also share what I found through my research of families around the world who have failed and succeeded in preserving their wealth. And I organize it by lessons and observations. It's a fantastic read that I go back to, and I'm mesmerized by what I was able to find. All this to say, I will sit down and record this book, and it will become an audiobook available wherever it can be available. So I'll keep you posted. That's it for today, my friends. I had a lot of fun recording this episode, hearing from you, reading your questions, answering them. I might do a bonus episode like this now and then. And I think it's a fun formula to invite you, the audience, to be a part of the experience. If you're enjoying the show, please do me the greatest favor and share it with someone in your life that would enjoy it too. Thank you for today. It was such a pleasure to see you. You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogumil Baranowski.